Welcome to Shark Cap Table Fast, the 1-minute deal maker that helps you keep your arms and legs. Now what we're going to do is we're going to structure a capital raise. We're going to manipulate 8 spin buttons in these sections, and then we're going to see how they affect the 4 metrics. So let's get started. The amount of cash that you put in the business, let's, for example, say it's $15,000. Let's put in additional value, and that additional value could be things like beta test revenue, intellectual property, patents, quality of management team, market size, and ability to capture share, other intangible or intangible assets. So let's put in about $350,000. So the total founder valuation is $365,000. Let's issue 1 million shares to the founders, and let's put in a 15% option pool. Professional investors want an option pool to reward future managers. Now we have to deal with what the pre-money value may be for the investors. It will never be what you think it is. It'll always be less. So let's put in about 300, and we went too far. Let's put in 325 and see what happens. The whole idea of this calculator, of course, is to try things. It's simple, quick, and it calculates rapidly. Now, let's say you're going to go for $250,000. So there is 250. And let's say in year 5, you will sell this business for $2.5 million. Now let's see what we've done for a investment multiple. We've got 4.35 for the investor. We've got 34.1 for the internal rate of return, and when we see green, that's a good sign because that means the founder has voting control and the investor has minority control. Now, let's take another quick look at the ownership stakes. They are different than voting control. If you did a percentage of these two, you would end up with 53 and 46. That's what these really are. But we dilute a little bit because of the options. Options do not vote, so that's why we have a specialized voting control calculation. Now, one more thing we do is we take this investment summary, which is made up from numbers like the ones we've calculated here, and we put them into a couple of grammatically correct sentences. You can then take this yellow section and cut and paste it into a business plan or your pitch deck. Now, it's important to understand that Shark Cap Table Fast is part of Shark Cap Table Lite. See, the red tabs here are the light version, and Fast is what is colored green, and that's what we've just seen. But when you go to Shark Cap Table Lite, and we'll have a video specifically for dealing with Lite, you'll see that all of the data is present. You haven't destroyed it, it hasn't gone away, because Fast talks with Lite. Now, Lite has a couple of great advantages. It gives you a bigger capitalization table. It also gives you a pitch for standing and delivering. It's similar to what you see here in the yellow, but it's much bigger. You get a chance to do some writing so that it becomes a real good narrative of what you plan to do. It also has another feature called royalties. There are 2 types of royalties. One is a gross sales royalty, and the other is a preferential royalty. We'll get into the details, but here's the point to take away. A royalty is a way to increase the return to investors, while at the same time you could reduce the equity ownership. If they have too much ownership, offer a royalty. So, having said all this, good luck. Let me hear from you. This is a great tool. Go buy it, and you will get Shark Cap Table Fast and Shark Cap Table Lite. And for a short period of time, we're going to throw in the Pro version, which will handle institutional styled investing. The Lite is really good for your first 1 or 2 rounds, especially with angels. And this little tool here, Fast, is just wonderful because you can sit down and kind of dream about what you're going to do and see whether it's even feasible, and you'll capture the data and it goes back into Lite. So there we are. Thanks very much. Good night.